the housing market shifted in favor of buyers, or at least that's what the CNN article claims. So when I came across this article, I found it to be very interesting because I just recently closed on a deal. And when we were in the market looking for properties, we did not really find much inventory. So the deal was actually a very competitive one. And in fact, it was the most expensive deal that we have closed to date, a total of $2 million. But that's outside of the scope of this article. So what I wanted to do today was to go over the details of this article with you to see if this information applies across the board. Did the market really shift in favor of buyers, or is it something that it's very localized? Because from my personal experience, I didn't see any excess inventory where I recently closed. Welcome to Normalize, your channel for financial education. In this channel, we cover anything related to real estate investment, precious metals, investing in the stock market, and small businesses. Now, let's get to the article. And here it is. The housing market has shifted in favor of buyers. And here's the catch, depending on where you live, courtesy of CNN Business. Now, let's get to the content itself. Americans looking to purchase a home in certain U.S. cities might be pleasantly surprised to find the tide is shifting their ways this spring after years of challenging affordability. There were 3.7 months of for-sale supply on the market in January, the most in 6 years, according to a recent Redfin analysis. That means it will take more than 3 months to sell all the homes that were listed for sale in January, given monthly average sales volume. The findings point to a housing market where sellers are slowly losing leverage after years of having the upper hand. Generally, more than 4 months of supply sitting on the market indicates a full tilt buyer's market. You see, I don't necessarily agree with the information shared here because according to Bankrate, and on top of that, according to my years of experience and years studying the market, what's considered a healthy average of housing supply, it's 6 months. So when I see this 3.7 number compared to 6 months, something is off for me. Now, it could be that this 3.7 is not being compared to the average 6 month supply. Instead, it is being compared to, let's say, the average number of housing inventory during pandemic times. If we are comparing those numbers, 3.7 versus the speed at how the housing market moved during pandemic times, then yeah, you can say, well, the market has decelerated and now it's taking longer to sell a house. But that's not really realistic because the movement that we saw during pandemic times was not realistic. That was an outlier. That was a one-time off scenario that just happened due to a combination of different circumstances. We were in the middle of a pandemic, interest rates were at the historical low, and on top of that, housing inventory was extremely low. So the people that were able to get their hands on more affordable mortgages, let's say anything cheaper than what you can get in today's standards, yeah, I can see why the housing inventory will be moving so fast because in addition to cheap money, we're getting very little inventory hitting the market. So whatever was available, it was all for grabs, right? Now, if you fast forward to today's time, the rates that we're seeing today are ranging somewhere between 6.5 to 7%. That compared to pandemic levels, it's considered high. Yet, when you put this in comparison to the rates that we were getting in the 80s or in the 90s, we are talking about double figures back in the days. And many of you could say, yeah, but back in the days, houses were cheaper. Yeah, but people also make less money than what we make today. Because let's face it, inflation impacts everything. It impacts housing prices and it also impacts salaries. I mean, some people might be in a situation where they feel that whatever they're making is not enough to buy their dream home. And that's a very valid concern. But your first property doesn't necessarily have to be your dream home. You can buy a home that you can afford now. And then in a few years, hopefully you'll be in a better situation. You could sell your existing home or why not cash out or take a HELOC out of it and buy the home of your dreams in the future. Anyways, I sidetrack a little bit, but back to the article. The fact that this article is saying that because of a 3.7 month supply average, we are now facing a buyer's market, that's a bit of a stretch because we don't really know if housing inventory is going to continue to hit the market, especially with everything that's going on with the tariffs. We don't know if things are going to get paused on hold. We don't know if construction materials are going to be more expensive. We don't know anything about the labor because of the mass deportation. So we need to consider all of those details those into account. So we don't necessarily know for sure whether that 3.7-month inventory is going to get pushed out to a longer period of time or whether it could actually decrease in the near future. Now, continuing with the article, spring has long been considered the busiest home shopping season in America as warmer temperatures and the end of the school year tend to entice new buyers and sellers into the market. However, persistently high borrowing costs and few new homes listings stymied the action last year. Home sales fell to the lowest level in 3 decades in 2024. Though mortgage rates remain similarly elevated heading into the busy season this year, determined buyers so far face less competitions and have more options according to recent data. An initially high number of homes have been pulled from sale recently, a sign that many home sellers are no longer fielding multiple competitive offers. Data from CoreLogic found that 7.6% of homes on the market were delisted in January, the highest level in over a decade. I do agree that spring and the summer are the busiest season for real estate transactions because, let's face it, warmer months, people want to be outside. But most importantly, families with children are not limited by the school calendar. So they have more flexibility to move their families from one place to the other without causing any interruptions to their children's school year. However, I don't necessarily agree that the reason why there's not enough inventory in the market is because home sellers are delisting the properties by not seeing offers. Again, it depends on where you are because recently where we were buying, the inventory was actually very limited and there were a lot of people competing for the same properties. Yes, I do understand that in some markets, some people might be hesitant due to higher rates in comparison to the pandemic era. And added to that, there's the uncertainty, massive layoffs, and volatility in the market. So it will make sense that some buyers will be a little bit more hesitant because you have to understand that when it comes to buying your primary home, 99% of the decisions is based on emotions. Do I see myself living there? Oh, maybe not. As opposed to when you're buying a property for investment. When it comes to investment, the numbers have to make sense. If the numbers don't make sense, just move on and look for the next deal. But when it comes to your primary home, it's very difficult to quantify that. So it will only make sense that if people don't feel certain about their economic situation, that they might be taken aback and wait for things to cool down or wait until they feel ready. But again, I don't think that's standard across the board. Because if we go back to this article, you will see that the information shared here will vary depending on the area. So let's say, for example, if we were to focus on Florida, apparently there's a surge in Florida homes for sale. Home shoppers in Southeast Florida have the most buying power of anywhere else in the country. In cities like Cape Coral and Miami, there are more than 11 months of home supply in the market, according to Redfin. Fort Lauderdale, West Palm Beach, and Jacksonville are also strong buyers market. Yes, 11 months of supply, it's a long time. However, what this article failed to mention is what type of properties are sitting in the market. Are we talking about condominiums? Are we talking about single family homes? Are we talking about multifamilies? And if you look closer, you will realize that the majority of the inventory that's sitting on the market belong to condominiums, properties that require the added expense of an HOA. And for those who are brand new to this, an HOA is basically an expense that you pay on a monthly basis to cover common areas. Let's say the expense of taking care of the grass, to clean up the aisles, the elevators, the hallways, the staircases, taking out the trash, anything that is required to maintain the common areas in good condition. So in addition to paying a mortgage, that HOA is an added expense. But that doesn't end there. Most of these places now in Southeast Florida are facing an additional common charge that had to do with special assessments. If we backtrack a little bit, you will probably remember seeing in the news the incident where there was this big luxury building that fell to the ground due to lack of maintenance. So the authorities in Florida are actually on top of these buildings, making sure that everything is up to code. And so what's happening is that the majority of these buildings are evaluating what's missing, what's not up to code, what type of repairs are needed. So in addition of the HOAs, an additional common charge is added for special assessments. And that bill gets bigger and bigger. And so what happens is if you're living on a retired income, most likely your income is fixed. So anything addition to that is going to throw you off because you're living on a fixed income. So what ends up happening is that some of these families are putting their properties in the market because they just simply cannot afford the common charges. Now, let's say a buyer comes in and looks at this beautiful condominium and starts paying attention to the bill. HOA, X amount of money. Special assessment, a couple of thousands. And that in addition to the mortgage, I mean, it is only logical that people will say, I don't want to go for these type of properties. Another point that a lot of people are not mentioning nowadays is that a lot of these properties with special condominiums, they used to be used for Airbnb purposes. Back in the pandemic days, a lot of people from the north were moving down south because of the flexibility with the restrictions, with the mask. I know Anthony and I personally were some of those people who actually travel away from New York just so we can get away from all of this drama. And we remember seeing a lot of the apartments being used for Airbnb purposes. Now, I've been monitoring closely that market, and I realized that some of the properties that were in that area for Airbnb purposes are currently in pre-foreclosure and in foreclosure. And I'm guessing what happens is now there's not enough demand to keep up with the mortgage and the HOAs, and probably they try to save the property by renting it out long term. But it turns out that maybe the income that they were receiving for long-term rentals were not enough to cover the mortgage and the HOA fees. And when you add that, the increase in property taxes, because when property values appreciate, that means your property tax bill is also going to increase. And in addition to that, home insurance. All of that combined puts a lot of pressure on the investor or the homeowner. That's the reason why a lot of those properties are actually hitting the market and possibly staying in the market for longer than we would like to see. So like I said before, just simply going by an average number, by an overall number, take a closer look. What type of properties are sitting in the market longer? Is it really a single family home or is it mainly condominiums? And that should give you a better picture. Now back to the article and let's look at a situation that is the complete opposite. According to CNN, steep demand persists in the Northeast. While buyers in states like Florida, Texas, and Louisiana may have plenty of options when shopping for a home this spring, intense competition hasn't abated since the pandemic-era home demand rush in many cities concentrated in the country's Northeast. When Betsy Ambrose sold her home outside of Rochester, New York in 2021, she expected to quickly find a new one with a shorter commute to her husband's job. Instead, her family is still renting temporary home 4 years later, waiting for a home to hit the market at a price point they can afford. Rochester had 1 month of supply on the market in January, making it the city that mostly strongly favors home sellers of the 100 most populous metro areas in the U.S. Buffalo, New York, and by New York, I'm guessing they're referring to New York City, and Hartford, Connecticut, follow with just over a month of supply. So there you have it. The market hasn't completely shifted nationwide. It all depends on where you're buying. And if you're watching from areas outside of Florida or New York, I sincerely apologize not covering your area. I talk about Florida and New York a lot because that's where my properties are, but that doesn't mean that I don't want to give any love to your state. So please, if you have any updates about your local market, please feel free to share them down in the comment section below. I would love to get to know you and to get to know your area. And since we're talking about buying a home, I would love to invite you to check out this video that shares everything about the mortgage application process and how it can help you get approved for one in the most efficient way. I'll see you in the next video. Take care. Bye-bye.